Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, March 13th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here. Actually, Jason, I'm going to have you read those. So we got some technical difficulties on my side here this morning. So if you wouldn't mind just giving us a quick read down before we start.
Yeah, Dan. Let's see. We got May corn up 3 3/4. You got May beans up 11, and you got May Chicago wheat up 6. KC up 8 3/4.
Oh, very good. Appreciate that. Looking at weekly export sales this morning, another solid week for corn, 967,300 for old crop, just a little bit for new crop, 13,400. Soybeans also on the upper end of the range, 751,700 for old crop. 43,100 there in the new crop. Wheat sales, really a solid week for wheat, 783,400 in the old crop, and then 82,600 for new crop. Meal sales, kind of lower end of the range, 184,800, and oil with another solid week at 68,500. Looking at outside markets here this morning, wholesale prices were unchanged, which was pretty positive in terms of the inflation news that we've been looking at. They were looking for kind of an increase of 0.3%, so unchanged was a welcome sight. Good morning, guys. I guess what we know as we start here this morning, we got a government shutdown looming, pretty negative feedback on the Democratic side, looking like they are going to dig in here a little bit on that side, so we'll talk about that. Continuing discussions on tariffs, and ethanol data yesterday continued to show a build in stocks there and a drawdown in consumption. So with that, I guess Dustin, maybe throw us a few thoughts here this morning to get us started, and we'll kick it around the room.
Yeah, I think every time we kind of turn around, we seem to be getting some weakness in the outside market still, and huge uncertainty around the tariffs. We know that funds were, very long coming into that last COT report, and then they liquidated, second largest ever sell-off in a 1 week period. And we get weakness like yesterday. It's hard to sometimes explain, why. And Justin said it yesterday pretty well, I think, which is like, it does feel like we're getting maybe a little bit ahead of our skis on some of this weakness. It's that old proverb, maybe these things are a bad thing. Maybe it turns around and there is a deal struck at some point. We just don't know. And that's I don't want to be too wishy-washy on these comments, because it's like, what's the point, right? We don't know. We don't know any year. But in this situation, we have some precedents that, like, the lowest hanging fruit for narrowing the trade deficit would be a phase one trade deal adherence agreement. One of them, at least. And so if we were to all of a sudden wake up to that, I think it would probably surprise a lot of people that have just been ultra bearish because tariff, everyone's going to get what they voted for, because the tariffs are going to disrupt business everywhere. Jason referenced the Bloomberg article yesterday. Like, what happens though when we already have precedence of a phase one trade deal if that's announced in a couple of weeks, right? And so this is where we're talking about volatility. Like, small changes in the geopolitical winds could mean very big differences for outcomes right now. So I don't want to be too wishy-washy, but I think the biggest, to sum up that story is we could see a lot of volatility this year in either direction.
Oh, sure. We were kind of talking last evening, just in terms of, I don't know, statistically, we don't think that there's ever been a planning intentions report that's been delayed due to government shutdown. So that could throw a whole nother wrench into this deal if they really dig in and things don't get hashed out. I think Justin's words were, it'd be a pretty interesting summer market if you don't have planning intentions to start.
Well, we didn't have a January report one of those years during the Obama administration because they shut down government, but they eventually released it though. and so it would probably just be delayed. I think the information is still going to be collected and released at some point, but it is. I mean, if it really was a kind of a long drawn out thing, yeah, it could be. The market is going to be missing that information. There's definitely a private sector, that will have assumptions, right? But there's no function in the private market to actually give us total acres that's reliable. I mean, the satellite data information, I think, has not been something that we can rely on very easily.
Well, just show dirt at this point.
Yeah, I mean, even midsummer.
Yeah, right.
When we're going into the June report, it's not been a very reliable metric, and maybe it's changed, but the last time we looked at it. So,
yeah, Ben, what's on your mind this morning?
Yeah, I just kind of jumping on the tail end of what these guys mentioned. My concern is if we don't have a report, and then we have to be patient as Trump urged the American farmer, and we head into the window where we have peak uncertainty, and we just kind of slap around within the ranges that we have, and then we have to wait until the end of June to get quarterly stocks and get an updated, the final acreage number. By that point, we might already have a pretty good grip on whether or not we have a good crop or not. So you really want to see the uncertainty volatility that we can see in April, May, and sometimes into June. So I hope that it's not muted because of what's going on outside of the grain markets. People focusing on everything except for the crops. And I think now we're gonna slap around in a maybe a 50-cent range in soybeans and a 30-cent range in corn, because I don't think anyone has enough ammunition at this point to get super aggressive on the downside. And there's not really a reason yet to really break away from the chains of tariff and things like that to put something underneath these markets. And maybe in April, if we were to get some negative planting weather, it might be enough. But again, you don't want it to be muted because of tariff talk and things like that.
And to be clear, we're not in any way saying that this thing's not going to happen. It's just that you do have a big couple of days here to see what's going to happen on the Democratic side and see if the Senate can get something done. Justin, big bump in open interest overnight for corn, almost 16,000. So I guess what's your take here this morning on what you're looking at?
Yeah, before we broke, we were the cheapest corn, and then we broke a bunch, so we're really the cheapest corn. Talking about the report, it's just kind of getting close enough now where you're like, and some of the comments about, the Democrats wanting to block something, there's arguing within the Republican Party. So it doesn't seem like it's very close to me, and I think the question is going to be like, are the Democrats like really trying to block Doge? I think that's a big thing, that they don't want that department going in and digging into all these programs. And so it'll be interesting to see how this all plays out, to your point, kind of see what those attitudes are. There's always been a big group of people that's like, we just don't need these reports. The USDA, they mess with the markets. And I have a starting point. I mean, if you go into this year, let's say it's delayed even a month or 2 months, having a starting point's nice. If you have no starting point, you just really expand. Like, is it 93 million corn acres? Is it 97? Same on beans. And then you start throwing yield uncertainty. So like the ranges of potential carryouts and implications with weather really widen out, right? So that naturally widens out volatility. And so one of the reasons we've been super hyper focused on crop insurance and Farm Bill is there's only certain things you can control, and one of those is these programs that end tomorrow, right? As far as like enrollment. So that's why we've been so focused on that, because that's a huge variable that you can control. And that's why we're really focused on that, because, this is a pretty open canvas, in my opinion, starting with, interesting roll numbers. And this, by the way, this affects, like, USDA report, like it or don't like it, affects global buyers' attitudes, how aggressive people get, all these countries that import grain with an unknown safrinha crop. Like it changes a lot of perceptions on, if it's, plentiful, right, then buyers kind of sit on their hands and they kind of wait. Maybe we'll wait till harvest, or will we hand to mouth? If it looks like it's going to be tight, they get more aggressive. So it's got wide repercussions on, the more you don't know about those things. That's a lot of, boardroom people that are looking at margins and, both from a consumption side and from obviously our farmer side and what we work on. So it's got a compounding effect, in my opinion, on volatility. If you weren't to get some of those, some more clarity on some of that stuff. So
You think some of that uncertainty, Justin, would take money out of the market as well? I mean, would the funds be able to have an overriding opinion without some of those fundamentals?
good question. I mean, I don't know the answer to that. It could. I mean, the algo type traders get attracted to volatility, right? So when something starts moving around, they like to plug in and it even creates more volatility, right? Like they like the movement. So I think, it's a great question. I don't know the answer. I mean, you might see a lot more option buying, for example. You might see users just getting coverage through options or producers getting coverage through options. So maybe you see even more open interest because they have to hedge for a number of different things that they don't know right now. So I don't know the answer, honestly.
Well, to your point, it's cast a wide net and understand what the outcome could look like at a crazy bullish type scenario and a kind of an unfriendly scenario, and accept
really,
the outcome
just
and go to the field.
Yeah, just care about your farm and
Right.
what insurance you have and what your costs are and what you need to make it work as a business, and that's all you can do. And probably be super disciplined. You always should be disciplined, but especially in this environment, you should really, really be disciplined. So
Right. Well, it's hard to believe in 2.5 weeks or so, we'll probably start hearing guys that are getting rocking and rolling.
well, 75 here tomorrow, so it'll be the fever will start pretty
Yeah.
soon. So
Yeah, and it's welcomed, that's for sure. Real quick, Rylan, even though I'm sitting at your desk, I'm not going to take livestock today. I'll let you handle that. So what's on your mind, buddy?
Well, I mean, it's been a nice little move here on the cattle side of things. It feels like the feeders have really kind of pulled us up a little bit. We saw a nice little uptick in open interest in both places. So we saw, 3,700 contracts gained in the live cattle, 2,300 in feeders. So I think the cash expectations are still pretty firm right now. We did see some initial sales at $2 in Kansas. So I expect trade really start to ramp up here. I wouldn't be surprised to see some today as well, but still a little bit mixed on the beef side. But, I think that's to be seen, especially just with the recent rally. So otherwise, it seems like we've got a lot more optimism kind of back in the market. Just in general, it's been a really good move. So, I mean, all in all, I just want to see if how cash really shapes up here. We got cattle on feed report next week. So I think, overall, it just seems like we picked up a lot of steam into that. That could kind of derail some progress. But overall, I think we'll worry about that kind of into next week. On the hog side of things, new lows for the move here. But, I think we are seeing a little bit of profit taking. It's been a really good move. The headlines are still a really big risk here, just with anything tariff related. But there was really a big focus yesterday on the bellies. Bellies were down like $13, taking carcass down $3. So I think overall, just, you got a little bit of kind of a scary sentiment going in just with that kind of drop. So we'll see how how the market reacts. Also on the export side, weekly net sales were at 20,300 metric tons, which was down 52% from the previous week. So, I mean, like, just overall, you got a little bit of bad news kind of coming into the day. I wouldn't be surprised to see some weakness, but overall, I think just with the cash trade kind of shaping up more to the positive side, we'll see if that's kind of the saving grace.
hey, Rylan, I have a question on this, and this goes with just headline risk in general. And so I don't follow the livestock markets as much as greens, but just looking through X, this morning even, someone put out breaking news, China canceled all beef contracts to US, replaced with, Brazil, Canada,
EU,
and I just think, and I couldn't corroborate any of that story at all.
No one could. And it was all, I mean, like, that's the thing is it's really hard to parse out where things come from on social media. And like, yeah, it's just, I think any market is going to be super vulnerable to that kind of thing. I mean, why would somebody put that out? You know what I mean?
Right.
If there's no credibility to it, which there wasn't. from
Right.
what I saw. I mean, I saw that and I immediately started digging in, and then you look at the person's profile and it's like, oh, well, they're just an insane person. So
Yeah,
you
right.
just,
That used to be like a you go to jail kind of thing for
Yeah.
some
Well,
rumors, but that's
right. I
but
mean,
that's
like
the kind of risk you have.
absolutely.
You know.
And like that's why I say I don't think it's it's definitely not exclusive to the meat markets. I mean, like you hear stuff all the time. I mean, but certain things do gain traction. Like you don't know what kind of news story that's going to come out that really sours things. I mean, the most notable was probably the pink slime thing back in the day about McDonald's burgers, and the market just went crazy, and it was like no one's ever going to buy a burger again, from there. And or the onion thing with quarter pounders. Like there's always something in the crosshairs. It's hard to separate kind of, my whole thing is just, let the chips fall where they may. Cooler heads prevail. Like a lot of this stuff isn't usually as bad as the market will make it seem, but things like the cattle, yeah, they react really strongly to that kind of sentiment. Sometimes you just don't really know what it's going to be.
Well, with so many unknowns out there, like it just attracts these, people that like to spread false news. So
Well,
you gotta-
especially at a market that's at record highs. I mean, like you see these kind of moves, and yeah, there's probably somebody short that wants to get out. So,
the story that was put out many years ago on a press release, a guy made it. This is prior to the internet, social media, etc.
wow, that's like
that's good.
I know.
Wow.
that's before.
He put out a story.
Wasn't that Al Gore who made the internet?
Yeah,
This is
it was
Fun
a-
Fact Thursday.
It was the he put out a press release that the Brazilian pod ripper had been spotted in the U.S. for soybeans, and people took it seriously, and Beans rallied a bunch, and he got in a lot of trouble for doing that.
I'm sure.
Yeah.
Now they call that Reuters.
Now you can
Yeah.
hide. Now you can hide behind a fake account. So
Right.
Yeah.
Oh, very good. Thanks for the update there, Rye. Jace, real quick, you get us where we opened here this morning.
Yes, sir. Right now we got May corn up 4 3/4. You got May beans up 13, and kind of buying right out of the gate on wheat up 9 in Chicago, up 11 in KC.
Perfect. Thank you, sir.
Yep.
A couple things to point out. Tomorrow is everybody's favorite time of the week. We'll have Fun Fact Friday tomorrow morning with Brian. So be sure to tune in. You never know what you're going to get there. Also, April 1st, Jack's got more intro in the outro, but running a special deal for new Ag Yield clients. We got 1 day to go here on setting your crop insurance elections. So if you have waited to this point and still want to visit, give us a shout. We'd love to visit with you. Talk to you about how all that stuff's going to work together in terms of your marketing and the elections that you'll make. So more than happy to work with you there. Also appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with Ag Yield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
At Ag Yield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new Ag Yield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.